Okay guys, welcome. This video is going to be one of the advanced harmonic patterns. Last video we just did a simple ABCD pattern, very simple. All the patterns basically are very simple because each harmonic pattern is nothing but a measured move used with the Fibonacci tool and your Fibonacci extension, unless you have your extensions on your Fibonacci tool the way I do, right? So just understand too, Fibonacci, I don't think I mentioned it in the last video, but Fibonacci is just nothing but a way in which you can use that tool to measure the market. But anyway, so what are we going to do here? We are going to discuss the bat pattern, right? And I'm just going to quickly write down what these the actual rules for the bat pattern is. Some people have to use pictures. I have some pictures there as well that I have on the website. This is just going to be a video of it. But once you begin to see these patterns in the market and measure them out on a frequent basis, you'll be able to know the extensions, the ratios automatically. Trust me. I never thought I would. I thought it was just too many numbers. But you will, trust me. Not only will you be able to unsee harmonics in the chart itself, you will know the ratios offhand. So a bat pattern has an XA leg, which is how we all start, right? So XA will equal your B point. Following me so far? Your B point for a bat pattern will be a 50%, 382 to a 50%. So 382 to, let's put this right, 38.2 to 50%, right? And then you'll have your AB. AB will equal your C leg. Your C leg can be anything from a 38.2 to an 886. Correct? Okay. Now, if you want to get the D leg, your D leg will be your XA extension will give you your D leg. Your D leg equals an 886. So this is how I understand it in my head, and this is how I write it down. Some people may be a little bit more visual. I'm going to show you the visual aspects of it in a second. But this right here is your bat pattern. XA equals B. Your B can be a 382 to a 50%. Your AB equals your C. Your C can be anywhere from a 382 to an 886. If you want to look, now we're looking for the D, the completion leg. And we measure it from your XA, which will give you your D as well. And your D should equal an 886. So what that looks like is we're going to do a bearish bat. And why it's called a bearish bat is because once it completes, it starts to fall. A bullish bat is once it completes the D leg, it starts to rise. And that's why they're called a bullish or a bearish bat. So let's do a bearish bat. Okay? So we're going to have a move down and a move up. And then we're going to have a move down, and then we're going to have a move up. Right? So, what this looks like is, this is my X, this is my A. The impulse leg, the first initial impulse leg is your XA leg. And where you begin it from will be your X. So, since this was the first move downwards, this is my X, this is my A. So, I will take my Fibonacci, X to A, and we're looking at a 618 right here. Since we're working on a bat, we're going to bring this down to the 50%. Right there. Okay? So now my XA equals my B. Show me what my B is. My B is at a 50%. So once you get to the B point, this is when you start really taking notice of what kind of harmonic pattern could possibly be forming. Your B point is the key in helping to identify the potential of what this harmonic pattern could be forming. Not saying there are not other patterns that do not have 50% retracement, but it just gives you an alert to start looking for something, okay? So now we have your 50%. Let me just take this off. I normally do not measure out the C because C can be anywhere between 382 and 886. So it really doesn't matter. As long as it does not break my A point here, I'm not really concerned with that, to be honest with you. But just for chagrin's sake, I'm going to measure it out. So my AB equals a C. So my AB will give you my C. And my C is a 618. Now, my D point is going to be my XA leg. So if I'm looking for an 886 for my D, I'm going to measure from X to A, and my D point is right here. And there is my bat pattern. Now you see, the reason why I like the way my fibs are actually set up here is because I can do this in one move. Let me go on here. No idea what's going on here. 1 second. There we go. The reason why I like my fibs this way is because in one swoop, I have my B and I also have my D point, right? And so it just takes out a lot of work for me. And you always want to have a Fibonacci cluster or a Fibonacci confluence or PRZ zone. So we use 2 Fibonacci's to match up with our D point. And we're looking for an ABA extension to give you a Fibonacci confluence. Sorry. So your ABA is going to have to equal a 1618. Okay? This is going to give you your, I'm going to put this in brackets, Fibonacci confluence. There we go. And this is where I use my extension here. So my extension tool is here, and I'll go from A, B, on the fib itself, A. And there's my 1618. And then what I would do, I would draw a box around my 886 and my 1618. And what this tells me is that this is my price reversal zone. So once price gets up into this box here, I'm looking for price to show some type of reaction of a reversal. Okay? Now what's interesting about this pattern as well, because sometimes price can do this here. And you're saying, whoa, what happened to my back? Well, price, I'm going to give you something, a little advanced tip right here. Price, you weren't necessarily wrong. You were wrong with the harmonic pattern. But this is now an extension pattern here. And we're going to go over that a little bit later on in the next harmonic pattern. But what happened was this apparent bat that you thought it was has turned into a crab, which has a different extension. But that's neither here or there. Right now we're going to stick with the bat pattern. Very simple. XA could be, your B could be a 382 to a 50%. Understand that on any harmonic pattern, it is not a valid harmonic pattern unless the B has at least reached the 382. So if you have a 23.6 and you're thinking that you have a nice harmonic pattern forming, you are incorrect. Now Scott Carney, the original guy who invented the harmonics, it gives you a 3% either way. So it doesn't necessarily have to touch the 382. Some people like to do it that way, but it has to touch the 382, but there's at least a 3% ratio in which it can be very close. So you want it to be at least very close to the 382, or whatever ratio you're looking at, for it to be confirmed for you. And that's totally up to you. It's totally relative. If you want to do harmonics and have it touch the Fibonacci exactly before you consider it to be valid, that is fine. But it is also okay to have a 3% ratio in which it does not touch the actual Fibonacci, and it can still be very valid. What I personally do is when it does not touch, I'm just on the lookout. I'm paying attention very carefully to price action. Okay? So this is the bat pattern. Nothing more, nothing less. Let's just keep it simple. And the reason why it's called the bearish bat pattern is because price, once it reaches here, it begins to fall. Okay, so now what we have not discussed was take profits. A take profit will be 2 take profit areas that we have. The first take profit will be a 382, and your second take profit will be a 61.8. And how to determine that? Take profits will be determined by, I'll put this back in here and put this right here actually. Take profits are determined by A to D. Okay, so what that means is that you'll take your Fibonacci and you take it from A to the D point. Now, some people do it two different ways. You can put it at the D point, the 886, literally, or you can do it if there was a wick. Some people put it at the wick. But whatever it is that you decide to do, be consistent with that. Scott Conant uses the extreme price. So if there was a wick, he does use the wick. I know some people that just use the Fibonacci. They stick with the 886. So with that being said, your take profit areas will be the 382. And notice how the 382 is right there with structure. Or it will be the 618. So that's what you're doing. You're looking for price to come back down after it has rejected from this area. You're looking for price to come down from here to the 382 or the 618 at a minimum. Now, sometimes price will come back down into the 382 and then bounce up and do a continuation trade. This is where you would have to watch price action to determine what you're going to do. What you can do is take half your profits off the 382 and let it run to 618 or to however far price decides to go. Or you can just take all your profits off the 382. What you're looking for is 382. Take profit, at least one or two. Now, sometimes price doesn't necessarily hit exactly because remember, these are just zones, these are just areas of confluence, so nothing is always exact. So I would suggest doing something called front running your take profits, which means that instead of putting it exactly at 382, you put it a couple pips above, depending on what time frame you're trading on. For the H1 chart, I put up about maybe 4 pips. And then if I'm on an H4, I'll put up 8 pips and so on and so on. Again, you want to make sure that you're grabbing your money you've gotten. Your trading is not in vain, so to speak. Okay? So that is it pretty much. I'm going to have a little picture, a little chart of everything that's written down here. But this is your bat pattern. And let's go see if we can find it on the chart. Find what bat pattern. All right, here. So I'm gonna go down to let's go to a daily, see if I can find it from a daily perspective. Now we're looking for a bearish bag, right? And this is how you start to actually train your eyes when you start measuring, going through the charts. So you're looking for double bottoms, of course. Okay, let's look over here, like this right here, for instance. We have move up, relative high to relative low. Okay, our price has come to a 618 area. So this would not be a bad, this will most likely be a different pattern, which we're going to go into a little bit later on. So I'll show you that one a little bit later on. And again, you may be wondering, well, why did I choose this instead of this whole leg? I could have chosen the whole leg. But remember when we spoke about in the previous videos that if there's been a break of a previous low, that this becomes a valid impulse leg, right? So this is a valid impulse leg the same way this whole leg is a valid impulse leg as well. But being that I see this double bottom here, it's more than likely this leg is probably going to give some kind of pattern before it continues its downtrend. Remember, what is the major market structure? Downtrend. But another story, you see how it all comes together a little bit later on. But again, we're still looking for a bat. Let's see, we have a down move here. Right? There we go. So we have an impulse leg X to A. We've come up into the 50%. We've come back down. Again, 382 to 886 is a C point. 886 is down here somewhere, but really make sure as long as it does not break your A leg, you're good. The price can actually come down and test this area, as long as it does not break this A leg and close below, you're good. Could be a different pattern, but you're good. Okay? So you have your X. Let's bring this over. Okay. So you have your X, your A, your B, your C, and where's my D? You see how this one swoop gives me the whole thing? My D point is right here. And you see what I was talking about before? You see how it barely touched? It didn't really touch the A86, but it came within, I would say, the 3%. So it's for me, it would be valid. So if you had your, let's say you had a sell limit here, if you had about 4 or 5 pips below, I mean, look where you would have gotten in at. You would have gotten in at the very tip of the wick, so to speak. I mean, that would be just a precise, beautiful, excellent, magnificent, awesome entry. People will be wondering, why? How did you do that? You let people think, hey, I do this all the time. But this is why, because you front run your trades. You understand that the market is not exact. It's an area. And so if you want to get into it, this is what you're going to do. So this would look like this. This is my, not mine, it's Trading View's harmonic pattern or ABCD pattern tool. And then you would, from X to A, right on top of the Fibonacci number. I use the wick on here, C, and then there's my D. Again, you want some level of confluence, you're going to use your Fibonacci extension tool, and you do an A, B on the Fibonacci, back down into A. My 618 and my 86 is right here. Okay, so now that is my price reversal zone I just drawn out. So when price came up in here, you see what it did? And then what makes this valid, which is quite interesting, is that once price came up in here, the next bar, there was rejection. So that's actually a nice little confirmation confluence that this pattern definitely was some validity to that pattern. Also, you want to start making sure as well, you want to make sure your pattern is valid. Once the B point has been broken, you can start to say to yourself, you have a confirmed harmonic pattern in the making. So just a couple of tips from that. So now what you're looking for is your take profits. You're going to go from A to D. Right there. Now look what price has done. Looks like it's my 886, right? Price has come down to 382 and hit the 618 as well, and then reverse back up. So both take profits were hit. Mission accomplished. And go about your business. And that, my friends, is a bat pattern. What you're looking for is a double top or a double bottom. You're wondering, well, this doesn't quite look like a double bottom, but when you begin to see, remember in the other video, when you begin to see the market in waves, you see the double bottom? You see the double bottom? Yes, it's higher than the other one, but it still is a double bottom. And so you go through the market and you just measure out the movements. Here's a double top. It's not a bad, I can tell you that right now, because if I measure it, it's probably 61.8. Yeah, you see that? But what I do, I just spot double tops, double bottoms, double bottoms. Now what's this one here? And once you start doing this, you begin. Here's a 50%. Here's 86. Here's another bat. Here's another bat. And again, notice one swoop. I have my X, A, B, and D. Okay. Here's my X. Here's my A. Here's my B. 50%. Come down. This looks like an 886. There's my 886 D point. We've come down. Take profits. So here's another pattern. So this is how you back test you understand what you're looking for. Let's give me ABA. You want to make sure I do it right. A, B, A. Okay. My 886, and look at that. What does price do all inside the zone? So when the price hits the zone, it reverses, comes back, reverses, comes back, reverse. I mean, it's beautiful. Let's take profits. A to D. They come down. 382 is hit. 61.8 is hit. Then it reverses back. So I mean, I'm not making this stuff up. I mean, I haven't looked at these charts beforehand. I haven't done that. I'm just looking through them for the first time with you. And this is how I spot the trades. And so basically you may be wondering, okay, well, how would I get into the trade? Let's say that. Let's say I get to the D point. When will I get into the trade? Well, that's more of a price action situation. If you understand what price action is, I'm going to have some information on that as well. If you understand chart patterns, things of that nature. But let's just say, for instance, you have the D point here. It's come down right around here after this candle here. We'll confirm entry. I already got in here. We have a bullish engulfing showing that sellers have clearly taken over and they're entered into the market. And you could have taken it down from that perspective. There's a lot of different ways you can get in. This is a daily time frame. You probably could have come down to a 4-hour. You got a little bit more clarity into what's going on. You know what, hang with this one. There we are. So you'll see something like this week right here. And then again, remember the major market structure and variations and things of that nature. So, you know, there you could have gotten in right up under here once the variation was broken. Once this was broken, you could have gotten in this candle right here. Or you could have waited until the actual structure was broken, meaning that this was the initial high. It's made a higher high. So you could have gotten in right over here, as you see, the price does. So there's a different methods in a way in which you can get in. When you start tying it all together, and this is a 4-hour chart. You can go down to a 1-hour chart and get a tighter entry. You can go down to a 30-minute, a 15-minute, 5-minute, and get tighter entries using the same type of methods to get in. But again, different video. This is just pretty much on the bat and how you're able to see the bat. Again, always just start seeing the market and movements, measured moves. And then once you understand, you start seeing the market this way, you just take your Fibonacci out and you just start measuring. Simple. What's this move here? Okay, so we have a 382. It's an extension pattern because it broke the actual different video. But again, once you see all these movements here, you just take your Fibonacci and you start measuring. You're looking for a bat is a double bottom or a double top. You see a double bottom here, so measure the move. XA, let's say the D hasn't even happened yet. Right? Exhale, you see your 50%. Okay, alarm starts going off. You see it drop down here. It doesn't break the X. It created a higher low. That's what you need to. That's what you're looking for. Boom, boom. Bells going off. Oh my God, what are we doing? Look like we're going to a bat. You can get in. Safest place for me is to ride from C to D. Because why I say that is because even though we know a bat's supposed to end at an 886, market can do whatever it wants. Maybe this is a crab pattern, so therefore it just keeps going up. So if I'm riding it from C to D, I have already probably gotten maybe 150 pips or even more, depending on the time frame in which you're actually trading. So you're safe. But if you just waited it out, how many hours, maybe days, for it to get to the D point, and then all of a sudden it keeps going up, it's almost like you're wasting your time. But from riding from the C to D, it takes a little bit more experience. When you're first starting out, you're waiting for the D completion. And then you're going to take it down to the take profit up to 382 and all the 618. Okay, so that's pretty much it. That is the harmonic bat pattern. Hope you guys enjoyed it. If you have any questions, I'm always here for you. Talk to you later.